Welcome back to the Seven Figure Flipping Podcast. This is Adam Whitney, and a few weeks ago we shared a call with our lending partner, Conventus, and you guys really loved getting an inside look at how these lenders work. Today, we're continuing that conversation with another one of our partners, Jessica from American Heritage Lending. Jessica joined us for a call with our members to break down their hard money program and specifically how Seven Figure Flipping members can take advantage of 100% financing options on fix and flip deals. She walked us through everything from qualification process to loan to cost matrices to how they approach rural properties, draw systems, and approval requirements. It's a really valuable perspective on how lenders think and how you can build strong relationships with them so that you can build your business. So let's jump right into that call with Jessica from American Heritage Lending.
Really want to coach you guys up on hard money and how this works, and then specifically also with 7FF as 7FF members, how you get 100% financing, because people are like, how is that even possible? How do we do this? How do you qualify? Especially if you're new to hard money. We want to just make sure you know the ins and outs of it all. And a lot of it has to do with buying right. So we'll kind of get to that part and just kind of coach you through it. And then answer any questions that you have too. So drop questions in the chat. I'll be watching it. I know sometimes, Jessica, especially if you're looking at the slides, it's so
Totally.
hard to see. You don't even see the chat. So I'll be watching that, and then I'll just be jumping in, asking you
Perfect.
questions. And then having just been a part of the mastermind for a number of years, I'll just kind of fill in common questions that people might have, and we'll just kind of talk through it. You've been doing a lot of deals with a bunch of our altitude members, especially, and in a lot of parts of the country, just across. There's some uniquenesses. For example, Utah, where I don't know of any hard money lenders who can lend 100%. But you can do loans in Utah. A lot of hard money lenders can't even do that. So we can talk about that too for any of you who are there in Utah. Still adding people coming in. It's so good. But kind of with that, we, as Seven Figure Flipping, as a mastermind, we're always looking for ways to, one, help make sure you get really good deals at the right price. Like there's nothing that substitutes buying right. Everything starts there. Then with that, in the 5F framework, it's, focus on what you're doing, you're finding, and then it's the funding piece of it. And so that's what this series is all about right now, and making sure you can get these deals funded. And then from there, it's the execution of it all. So with that, American Heritage is a great partner of ours. Those of you who know, I'm from Southern California, South Orange County. Jessica's from the exact same place. We eat at the same places, love the same food. She's got a great family, and they're right there in Irvine. So it's just all these great connections. We have a bunch of members in California as well. And I think when we were first talking, we were kind of talking about some of our struggles with hard money, one of which was there's no lending in Utah, which just happened to be a state that no one was lending in. You're like, oh, I can do that. And then we kind of just went through, just different pieces of what people need in funding. And it's always good to have relationships with multiple lenders as well. And then from there, we just were talking, and we were going through systems, processes, what we do at 7FF, how we support our members, just like coaching, development. And it was, would you guys do 100%, for us too? And it was like, okay, let's vet you a little bit more, and let's see who your members are. And now with the relationship, I think we have some great operators that are doing some great deals. You're funding deals for them.
Oh, yeah.
For us, it's really important. I'll just say to all of our members, our partnerships with our hard money lenders it's a stewardship that we have. It's an incredible benefit that is incredibly valuable. And so we take it very seriously. And what that means is one or two, three bad deals can literally wreck it for everybody. And so we've got to be getting deals funded, like the right deals need to be funded, and then we need to come through. We need to come through on these deals when markets shift and things happen. Like, we need to have protections and backup and security to make sure we come through on these loans so that these benefits can go towards everybody else. Jessica, I may be jumping ahead, and I know you have like a whole presentation.
Oh, you're fine. I want it to be very like if anyone has questions, ask. Like I want it to be
Yeah.
conversational and
Okay,
natural.
cool. And I want you to kind of give, just a little bit of your background too and introduce yourself. But just setting the stage, a good hard money lender can also help you from doing a bad deal because it's another set of eyes and they're sitting there going, we're not going to lend on a bad deal. Like that would just be bad. So when they come back and they push back on you, don't think of that as as something negative. Think of that as they're a member of your team saying, wait, let's be careful on this. What about this? What about this? What about this? Like, are we sure? And they're pushing you to be a better operator and a better investor with that. So okay, Jessica, I know we're going to go through like the details of what
Yeah.
qualifies and all that, but let's back up now, start from the
Okay.
beginning, introduce you, American Heritage, and then take it away.
Yeah. So my name's Jessica Reynolds. I've been with American Heritage Lending for about 5 years now. I did conventional lending before, but I absolutely love this because it's so fun because every deal is different and it's just an adventure in itself. I'm super stoked to be connected to your guys' group. Like he was saying, I have funded so many deals for seven-figure flippers now and have created really strong business relationships, which I think are going to, continue to grow. It's really nice when like, half of your day is just referral calls and, hey, my buddy like worked with you and he's, like I love that. And it's starting to really come naturally with all my seven-figure flippers. But yeah, we've been in business for 25 plus years. So a lot of different companies, they do, numerous types of loans, but we just focus on DSCR and our rehab loans. We just added ground up and it's really, really competitive as well. But we have these dialed in. We've been doing them for years, before I feel like DSCR is kind of getting a little more popular now, but we've had these products dialed in for years now, and super competitive. We're a family owned business. We're all in office, which is amazing. Like I can walk over and be at my appraisal desk in 2 minutes in my processor. So it's really a family unit, which makes it really, important and special in itself. So, when your appraisal comes in, I'm literally at his desk talking to him face to face. So, and we work as a team and I'll go to bat for all of your deals. But like he was saying, of course, if we think something's not going to work, we're going to communicate that because we want to work together and have everything be successful for you guys. But yeah, and I have two little girls. A little bit about me. I have two little girls. They're 9 and 11. I'm a sports mom, a lot of club soccer, flag football. So usually on the weekends, I'm still available. I can write up commitment letters all day long, but if I don't get back to you right away, I'm probably at some type of sporting event. So yeah, that's a little bit about me.
Awesome. Thank you. In the chat, Adam's on as well. And he's like, Jessica, I'm coming with the hard
I,
questions.
I saw I saw that pop up.
That's so good. So with that, let's just get into it. Are you sharing your screen or is Tracy sharing?
Tracy said she's going to take
Okay.
over the slides. So here, obviously, we're your partner in investor lending. My contact is below. It will also be on the last page. And I'm sure this will be blasted to all you guys as well. So there's my contact. So we can go down to the next page. Perfect. Okay. A little bit. I kind of already went over this. Fix and flips, fix to rent. We do have a really unique product where if you do plan on holding one of your rehabs as a rental loan, we can transition you straight into a long-term loan, meaning it's a one close. So that being said, we would have to, it's a little bit different in regards to appraisals because for our normal fix and flip, we're going to do a in-house, close in 12 to 14 business days. This one, obviously, we're going to make sure that it works as a rental. So we're going to have a full appraisal done up front to make sure that rental analysis works and that it's going to be successful as a long-term hold. But that one, as soon as you're done with the rehab, you call me, we put you into that DSCR product and it's super streamlined. So there's not extra closing costs. You already have the appraisal done. So that's if you guys want to hold any of these and build your portfolio. And another thing, for the DSCR, we just added about 2 weeks ago, we can go up to 5 to 10 units. So that's totally new for us. So we are capped at 4 for a long time. So, and the pricing is really, really competitive on that as well. And then as I was saying, bridge and then new construction. We also I think that I've talked to a few of you guys in regards to construction and we used to have a lot of experience, but now if you're using a GC with experience, we can still do ground up for you. So they kind of loosened the guides on that one recently, this week actually.
Hey, Jessica, we're going to keep jumping around because questions will come in. That
Totally.
when everybody from 7FF that I've connected with American Heritage, I just connect them directly with you. In the
Mhm.
chat, Jimmy asked, he's like, will Jessica be our loan officer? So maybe just
So,
talk.
yeah. So I talked to my boss. So basically, they want me to be the main person. If it gets to the point where I need, because I have an assistant now as well. But for right now, I am your guys' loan officer. Yeah. And yeah, my assistant's awesome. I've been CCing him on all the emails and he puts all the files together, communicates. I'm still in the picture, obviously, but he's like collecting docs and kind of setting everything up.
Perfect. And I know like rates are always changing. So anybody who watches this recording, they're always going to have to get current information. But just as you go through the presentation, give us an idea of rates.
For DSCR?
The SCR, when we get to fix and flip and you walk
Yeah.
through just all
So
of it.
DSCR is our floor rate at the moment is 6.25. Obviously that's, a low LTV, great credit. I would say like with no points, great credit, you're going to be looking at like a 7.125. And then another kind of unique thing is if you're not at the max loan to value, we can finance the points into your loan for you. So it's not coming out of your pocket. So a lot of them you have to like pay it at closing, but we just roll it into the loan for you if you're wanting to buy down the rate.
Perfect. And is there a point in the presentation where we're going to walk through exactly kind of what credit people need, ARV, kind of talk through all of that
Yes.
on the
I
fix and
actually
flip?
have the whole matrix on here, so it might get confusing, but I have everything broken down and obviously ask any questions that, you need to ask me.
Awesome. Awesome. Keep
So I
going.
think we can go to the next slide, Tracy. Okay, this one is just a little bit about us. August units closed. We closed about 402, and as the year units closed 3,097. August, just this past month before, we did 141 million, and year to date 950 plus. So we are, you know, we're super busy, and we're just striving to get better. And you guys, as your company alone has helped us get to those numbers. Because I have like borrowers like Angelo and Willie, and I mean all their deals are at least a million, and they're amazing. So I mean, thank you guys because you guys helped us to get to those numbers 100%. All right, we can go to the next one, Tracy. Sorry, keeping you busy over there. Okay, so this is the one thing that I really did want to really go over. And Dave, I know we've kind of talked about this. So for the matrix, depending on your experience, we can cover 100% loan to cost, but there is different like barriers when it comes to like the LTARVs. So you can't go over 70 based on some experience or 75 based on others. But our investors are happy to give the 100% loan to cost, but the as is has to be at our lowest tiers, 85%, and at the higher tiers, it can't exceed 90%. And what that means is you have to buy deep. So your purchase, like, so the property has to be worth more than the purchase price. So you're getting it at a deal. So essentially the calculation is the as is plus the rehab divided by the purchase price plus the rehab. So I actually did this, and I'm happy to do it with anyone. I actually brought a whole spreadsheet out and I did a deal with someone so that we can like play with the numbers. It was actually Willie, because I want everyone to really understand it and feel confident. So keep in mind, like whenever you have a deal, even if you're not under contract, call me and we'll run all the numbers to make sure everything makes sense and you understand, what I'm saying. But
Jessica,
this is a huge,
when we first talked through this, what really stood out to me and just kind of locked it in my mind is you want us as the investor to have some skin in the game. And
correct.
think about this, when we're buying below market, we're buying off market at those discounts, we're actually bringing equity to this.
Hmm.
And so they may cover 100% of the purchase price, 100% of the rehab. It's that equity that is our skin in the game. Is that a fair way to say that?
Yes, 100%. That's
Okay.
perfect.
Cool. And does anybody have a question on this? Because sometimes when people are just getting going, they're just starting to gain traction, they're looking to buy, they're so anxious to start a rehab project, they'll find a deal and they're just really aren't buying at much of a discount at all. They'll apply for 100%. It doesn't quite qualify. And it's like, wait, what? I thought you said American Heritage was 100%. this is one of those factors that needs to be understood.
Hmm. Yeah,
Okay.
so obviously the deal is not dead. We just have to kind of restructure it. So, like he said, you might be at like 98 LTC, depending on where this comes in and the LTARV. All right, I think we can go to the next one if anyone doesn't have any more questions. Okay, so this is the matrix that I was telling you guys about. So this is just made the investors that we work with on Wall Street created this for just you guys. So no one else gets these numbers. So if you
Hey,
see kind of
Jessica,
what
I gotta jump in too. Like it's
yeah,
seven-figure flipping, but I know like you're always calling us. You're like, I've got another seven-figure flipper.
I know. I always say, I know. I'm sorry. I know.
And now it's on the documents too. That's
Oh,
that's,
how funny.
that's so funny. But hey, we'll take the 100%. We can fix it later.
I know. We will. Yes. Seven-figure flipping. I know. Okay. So as you can see, so zero projects, even if you've done no projects, we're still going to give you the 100% loan to cost. That as is at, that 85%. And then you can't exceed 70% of the after repaired value. Um, you see the non-judicial state versus the judicial state. We did have a site a long time ago, which I'm going to find for Dave, where it's like your site that links to us, where it has like all 50 states. You click on it and it tells you if it's judicial versus non-judicial. And I'll make sure we get that so we can send this out in like a blast for you guys. But these are the kind of metrics. So also in regards to rate, we have all different options because we kind of wanted to benefit because there's some people that are in and out like in 3 or 4 months. Some people take the full 12 months. So we kind of gave different options in regards to rate and points. So for example, like I'll just go to the top, like if you have 10 projects and above, we have the option of, the 10 and a half, 1 point at closing, 1 point exit fee. Or if you'd prefer to save money at closing, we have, the 10 and a half, 2.5 points at exit. Or I have some guys that are obviously out in 3 months. So they usually go with that 13.5 with no points. Especially if the loan amount, if you're going to be in and out fast, the loan amount's 1 million, you don't want to pay points. So those are just different options in regards to the rate and points. But I'm sure we have questions.
Yeah, okay. So one question we have, and this has to do with maybe we can talk about when a full appraisals are required or not. But Brandon had the question, how do you determine as is value on a distressed home?
So our appraiser does that. Like we collect the budget and scope, and we also collect interior photos from you. So with all of that, he does the value for the as is versus what he feels the after repaired value will be based on the budget and scope and all the photos. Or obviously, if you're adding square footage, like we collect all that information, and that's where he calculates those numbers.
So in-house, your guy right there down the hall, he's going
Mhm.
to put that together based on the information given. But then
Yeah,
also when a loan is over 750K, that also does require a full appraisal, correct?
correct. That requires a full appraisal, and that we always give the appraiser all that information as well. So for it, obviously, with those, I always try to give as much information as possible. Like for example, I know I keep bringing them up, but I had Willie. We added a lot of square footage, and it was a huge deal. So I had him write out like a paragraph of like his plan for the whole entire property. I made him just like give me all this information because I wanted to give that information to them so that they knew. And I also just told them like I don't know, just that it's a rehab, all the info. As long as you give as much information, the appraisers are really good on that side. Like I even had one recently, and he went down to the fact like he wanted to know what brand they were using for some of their products. So I went back and got all that to increase the LTARV because I actually called him and I was like, hey, I just saw that it kind of came in a little. It was in Utah. And the comps were just all over the place. And he had mentioned that it was really hard for him. So I was like, what was hard? And he's like, well, there's all different types of brands. So then I got back with the borrower. He gave more information and the appraiser actually bumped it up. So I just feel like the more information given, the more accurate your numbers are going to be.
Perfect. And now we said this, we kind of hit it really quick of the judicial states and non-judicial states, but one of the questions in here is up to what percentage of the ARV? So if you can maybe talk to that 70 versus 75.
Yeah. So say 3 to 5 projects. If you're in a non-judicial state, the loan can't exceed 70 well, let's go to a different one. It's the same. So like for 10 projects and above. So if it's a non-judicial state, our loan cannot exceed 75% of the after repaired value. Whereas a judicial state, which I can like call like New Jersey, New York, or judicial states, we would not be able, the loan can't exceed 70% of the after repaired value
Yeah.
for
Okay,
you.
Jessica, I got a question. This one's from Jose. What if
Mhm.
we get discounted rate on rehab from our GC on a project, so the statement of work doesn't reflect the actual value? Does that affect ARV from appraiser? And if so, how can we reflect that? Should we ask for more?
Okay, so I'm trying to, so are you saying like the rehab, you're not asking for all the rehab from us, so we don't really see everything that you're doing?
Yeah, or it's just less. So, you're here's the purchase price, and then Jose, you can come off mute if you want, but maybe it's an $80,000 rehab, but they're only asking for 60. Maybe it's
Hmm.
is that what it was? How does that affect the ARV from the appraiser, or does it at all?
I mean, it would just have to be one of those things where everything is communicated because everything communication is key in every part of life. Like they need to know everything you're doing to get that ARV where we need it to be. You know what I mean?
And
Because
I
if you're
guess
just putting a few things, then that's what they're going to look at and that's what they're going to reflect the ARV based on.
and I guess part of his question was just from an industry perspective, should he
Hmm.
ask for more even though he may not use it all?
Well, there's always like that contingency that you can add or like for just things that come up. I think that's always a safe thing to do. I mean, we require it for, I mean, it's on another slide, but we require it for anything 200K plus for budgets because just for surprises, because you never know what you're gonna need. So you could always add that contingency if you think you're gonna maybe need more.
Got it. So just to be clear on that, if it's a 200K rehab or
Hmm.
you're requiring an overage just for
We require 10% of the budget in a contingency.
got it. All right, cool. Jose, if you needed more, come off mute and ask. Here, this one's from Luke. Hey Jess, do you count our buy and holds rehab projects towards experience? So he's done some buy and hold rehabs, already has them. Do those count as experience?
100%. Anything that you purchase, put rehab into, hold as a rental or sell, counts as experience.
Love it. Okay, cool. This one's from Jeff. What purchase price does the 100% LTC go up to with 10 projects experience?
Purchase price. So our max loan amount is 2 million. Our minimum loan amount is 75,000. I mean, those are our main, you know, guide. Purchase price. I mean, you're going to get 100% loan to cost no matter what purchase price. But those are our like, minimum and max loan amounts. In California, we can go up to 3 million though.
Oh, you can. Okay.
Hmm.
For that market area. Okay, this is Jimmy. Do you verify all funds to close? Meaning, if my brother gave me 10K, would this be okay?
Gifts are a little tricky. Sometimes like that we can do because it's minimal. But that's just something that has to kind of go through underwriting. But they are a little bit tricky.
Got it. What's the best way to handle that?
Um, I would just, if you're planning on it, just right up front. Everything up, the faster you tell us anything, the best. So then we can just go and get the exception. Or, I mean, if it's 10K, we might not even need it because they don't really source on on rehab loans unless it's significant. So just have the conversation with me right away if you're going to be borrowing money.
Or maybe your brother's lending to your business anyway, so now your business just has that money sitting in the bank.
Exactly. Yep.
Okay, and then just when we get to it at the right time, let's talk rural and just do the distinction. I don't know if that fits right here or if it fits a little bit better on other slides, but let's just
I can
distinguish.
answer it for sure. We don't, I mean, rural's also tricky. We don't lend on a lot. I have funded rural. They're not the biggest fan of them, but I usually go to the president. I go to Dave right away. I just shoot him the address. And we kind of look at like the nearest Starbucks, the nearest hospital, the nearest airport, and kind of like get a feel of like the closest city. And if it's like really rural, he'll usually be like, sorry, Jess, like we can't do it. But sometimes we can. So that's just another thing that we review right when we get the property.
And
I'll
maybe
take
just
the
explain why.
Our investors are just not, they're it's just a hard, I don't know the perfect reasoning, honestly. Our investors just do not like to buy rural properties. They're worried about the reselling of them, I think. They're just harder to sell for some
Harder
reason.
to harder to find the right comps to know the right number.
And the comps, yeah, because we always want at least like 3 to 4 comps within 5 miles. And obviously, if it's rural, that's going to be hard.
And then does it obviously you kind of talked about how close it is to an airport, city, that kind of stuff. If you have history in a rural area, you've already done 20 of them, does that help?
So that is a really good question because I do have a borrower. Because I actually kind of snuck one in because I'd worked with him for so long. And I kind of got, but I told my boss, I was like, well, he's done like 10 loans in this general area. And and they kind of made a new rule because of what I did. And they're like, okay, so if a guy has been successful with flips in this area, they will look into that and use that as a compensating factor.
Cool. So the whole thing is about relationships, information up front. The more
Yes,
information, the better. And let's just communicate really well.
totally.
All right, let's see. Kelly, question for experience rating, is there a certain number within a certain time frame? I flipped around 50 properties over the last 12 years, but have not done any in the last 4 years. What is the time frame for counting experience?
Yeah, that's a really good question. So it's all of our experiences based on the past 3 years.
Okay.
So anything over that, we would have to start you off as the zero. But yeah, so everything's in the past 3 years based on experience.
Yeah. Okay. All right, good. Let's keep rolling.
Okay. All right, Tracy. All right. Okay, so this we kind of went over. Um, the in-house appraisals, anything under 750, we do in-house. The full appraisals are only required when it's over 750,000, or if we're going to do that one-time close. So we'll have to get that rental analysis and everything up front. Okay. Okay, yeah, we haven't gone over anything to do with draws yet. So, I'm sure, I mean, if you guys have worked with other lenders or, even if you haven't, this is really, really nice. It makes it very streamlined, because we're all on our phones all day, or most of us. So we actually have an app for all the draws. So you're not having to wait on inspectors. As soon as you complete a line item on your budget and scope, you just upload a photo of the completed work, request the draw, and then your money is wired to your account within 24 to 48 hours. So as soon as your loan funds, our company sends out like a little instruction, a link, and all the, how to work the app. And if you ever have any questions, you can always reach out. But I mean, we make it as easy as physically possible. We don't want you to have to wait on people coming out to inspect your work.
Yeah, this is quick. This is maybe just a good opportunity to talk about why Bill is always talking to us about fund 115% of your deals, mixing your hard money with some private money. Maybe that private money is loans to your business, money that you're lending to yourself, as well, but just making sure you have that cash flow coverage for draws. So a lot of our members are paying their contractors every Friday for work.
Okay.
And so oftentimes if you're inspecting Friday morning or Thursday and work that's complete and done, if you want to pay them right away and then you're submitting through the app, this is fast, but it means that money's probably coming Tuesday right there. So
Yes.
for you to be able to have that float to pay your people Friday, get reimbursed basically Tuesday, that's why we want that additional money raised.
Totally.
Okay, awesome. Any
Does anyone
questions?
have any questions on this?
Yeah. Rebecca, what is the cost per draw?
150.
$150. Okay, cool. And then do you have any advice on just the draw system and how to just be as successful as possible with it?
They always say like obviously like itemize it at the best you can because sometimes it's a little bit too generic. So itemize it. Um, like I said, the more information, the better. And then we also have where I do the budget and scope, we've created like a place where I can, like I said, write that whole paragraph on like kind of creating a story of what you're planning on doing to the property. It helps out a lot to get us the numbers that we need.
Okay, got it. Cool. This one's from Luke. I got a little bit of paragraph here. Are you able to see that, Jessica, or should I just read it?
Hold on. I'm trying to find oh, here we go. I haven't even been looking. I'm sorry. Okay, here
No,
we
no,
go.
that's okay. You're focused on your senior slides. I can read it too. So for a fix and flip loan, At what point do you require final subcontractors or GC bids to be submitted? Our current lender requires all bids and the scope of work to be in place before closing. They also require us to stay between a 10% variance from our scope of work submitted. One of our concern is on larger rehabs as we rush to get statement of work submitted and don't get to shop pricing with multiple vendors as we worry about missing the closing date. When do you require the final statement of work to be submitted before the close on the property or before we need to start drawing?
So we do need the full budget and scope in the beginning because we base the whole loan on that. So if you guys come back and like, once we have that ARV, the as is and all the things, if we switch up the budget and scope, we have to resubmit it to our in-house appraiser and then underwriting has to look at it again. So we do have to have it, dialed in the beginning.
So what's a best practice for that?
Um, what do you mean by that?
Well, you don't want to undershoot, right?
Yeah, okay, yeah. Well, I mean, I guess that kind of goes along with like the whole contingency thing though. Like if you're not super, but I mean, we don't even require a general contractor unless it's your first deal that you've ever done, or if the budget is, at that, I think it's over 150. So if you're not using a general contractor, I mean, I don't know, like usually everyone kind of has an estimate of what their budget and scope is, but I mean, if you do have changes, it just might be a delay. That's all, you know what I mean? Because we will have to go back. It might be a day or two, but sometimes in this world, a day or two, you know, is a big deal, obviously. So,
Right.
And then do you
my
have any
advice would just,
variances you need to stay within on your scope? Like,
what do you mean?
so
Like,
like for example, current lender we use has a 10% variance. So if we submitted HVAC as a $20,000 job, if we're over 10% a variance on that, we have to submit a change order on that before we can
oh, for the
receive the
draws.
fund
Yeah, so
for the draw.
you do have to create that. It would be
Oh,
the same if you changed it after the fact, yes.
oh, is there a percentage range for that or
I would have to check because I honestly don't deal with that part, to be
oh,
totally honest, but I will, I have your email and all your contact. I'd be happy to find out and I'll shoot you an email on that. And
awesome.
I'll let Dave know too, so he can let
Yeah.
anyone else know.
Yeah, we could just kind of put what we're doing is we're just kind of listing out bullets, right? Like
Totally, yeah.
all the things you need to know. Yeah, great question, Luke. All right, this is from Jimmy. Should we use Realtor.com, Zillow, Trulia as platforms for an ARV estimator?
I don't know. I mean, for ARV, I don't think that would work because based on Zillow, that I don't think the work has been done yet. So I don't think that would work for
We'll probably look
ARV.
at, they're probably talking about comps, right? Like just
Or yeah,
find,
maybe like as is,
yeah,
I could maybe that. Um, sometimes that stuff is so not accurate though, so it's so hard. You know what I mean? Um, my best advice would just get all your information to us. And I mean, we get our numbers back within 24 to 48 hours from my in-house. So we can get accurate numbers that we can actually work off of.
perfect. All right, from Tammy, any first timer incentives? I think you guys are always trying to just give us the lowest rates possible uh,
Yeah.
for these and cover as much as you possibly can is kind of the big incentive. Any
Yeah.
anything else for first time
We
lender
don't
or
really have
borrowers?
any first time incentives. I mean, you'll have a great experience with us and you will definitely come back, but we don't have any first time incentives. But I mean, we have just incentives all around. Like, I mean, my goal is to just get you guys the best pricing possible and, make the transaction as smooth as I can.
Perfect. All right, this is Ethan. Thank you, Jessica. Yeah, you do. All right, we flip, but also are a complete design build GC with engineering team and a cabinet company. Does self-performance of the work cause any particular complications?
So if you're the GC,
They're the GC, they have a cabinet company. We see this a
mhm.
lot in altitude, especially, right? Where it's like they are the construction company. Um,
Yeah,
they have the other pieces. Does it cause any particular complications when it's our company that's doing this work?
it doesn't at all. I mean, if you're licensed, if anything, it's actually a good thing because you have, the experience. So I've had a few people that have it and it's caused no issues.
Awesome. Yeah, easier to quote and get,
Yeah, I mean, they really know, you're more experienced, you know exactly what you're doing, so it's actually easier.
love it. Okay, cool. All right, keep going.
All right. The next slide, please. Okay. So we kind of have asked, so I mean, we kind of went over this as well. So I was kind of saying itemized budgets. So, make everything as accurate as you can. Just as, strong, give as many details as you can, faster approvals. Because if they have to come back and ask, on certain things, underwriters, I mean, if you're as clear as physically possible, especially if you're adding square footage, your plans, everything, it's just going to go through our process that much faster. And then contingencies, obviously, we were talking about that before, can be financed as part of the draw schedule. And that's only when your budget is over 200,000 that has to be added to the budget. And then I think we can go to the next one. Okay, this one. So I kind of want to add a little bit more to this. So these are the states that we can't lend in. So we can't lend in Nevada, the Dakotas, Vermont, Alaska, Hawaii, but there's a few ones that are tricky with rehab. And Dave, I've kind of talked to you about this. So South Chicago, we're not doing flips. Detroit, I'm trying to see if there's another one. Detroit, and then the five bureaus in New York, we cannot lend in. So it's not that we can't lend in Chicago at all, but it's just Southside Chicago, Detroit, um, and I'm trying to see, and Baltimore. So those are the ones that are tricky with our rehabs that our investors are not allowing us to do business at this moment.
Yep. And it's simply risk factors that investors of what they're comfortable with and what they're not. So
Yeah, there's just been a
that can
lot of
change.
things, and the
Yep.
investors came back and they won't let us. Yeah,
Yep.
the war zone, exactly.
Except for when the Lions win, Adam, then it's all everything's good for a few hours.
For a few hours. I love it. Okay, and then here, so this is kind of more, approvals in as little as 24 to 48 hours because, once we have your numbers, we know if the deal is going to work or not. I mean, that's the main. If your credit, you have the money, the as is ARV comes in, you know, we can approve this really fast. Average close is 10 to 14 business days. That starts, the minute I get a full application and all the documents that I need. And then, a lot of my repeat clients, once I have an application from you, I just duplicate it for any future deals. I have folders for all my clients. So I keep your LLC docs, mortgage statement, everything so that you're just literally giving me deal specific. So I make it as easy as possible. So I mean, if you get me everything fast, we'll push these through, like I said, 10 to 14 business days. Of course, title insurance, sometimes things get backed up, but that's on our end. And then pre-approvals, once I have an application from anybody, if you guys need a commitment letter, I can offer that for you. So when you're putting offers in, so even if anyone on this call doesn't have anything that, you're under contract for or that you're ready to move on, once you find a home, if I have an application, you can just call me, text me, give me the address and the purchase price, and I'm happy to write up a letter for you. I'll have it within 5 minutes.
Great. And Jessica, there's a couple of questions about certain areas. It's always good to have a relationship with you early so that don't wait until you have a deal under contract and everything's timing. Connect with
Yeah.
you, form the relationship. Kelly, you can ask all the cities that you want, are these approved areas or not? But do all of that now before there's pressure.
Yeah. And if you ever have I mean, you can always call me. We can go over a property. No problem. Okay, I think we can
Okay.
go to the next slide. I don't think we have too many more actually.
Yeah, and then Jimmy was asking too. I guess it kind of relates to that. Jessica, can I call you to target figure out a value for a property? I feel this is important for the first step to making an offer and knowing, okay, so he's about to start making offers, ramp up in his area. Can
Uh-huh.
can he call you and just start and ask, and just have a conversation about values, property value?
Totally.
Okay.
Yeah. I would rather everyone ask questions, like over ask, than, be surprised later. Like I want everyone to come to me, even if you're not 100% sure, just we can go over everything. I'm happy to do it. And like I said, I mean, the best was to get an application done so that when you guys are ready to move. I mean, I have people that do an application, throw all their LLC docs in there, put their mortgage statement, and just have everything sitting. And then they go under contract and they're like halfway there.
Perfect. Now, I think we may have a link. Do we have a Tracy? I don't know if we have a specific 7FF link, and we don't have one in the chat now. We'll probably post it with this recording, so we can put it in the group for later. Jessica, do you have a certain link, or is it just you want people just to direct message you from here?
They can totally direct message me. I'm gonna get with my marketing and see what we can do for that because I think we were talking maybe HubSpot, make it so it's like it can all be in one area.
Yeah.
Yeah, I'll try to make it as easy as you guys, but there's all my contact above right there. But I'll definitely try to make a link, and I'll get something for everybody for that non-judicial versus judicial, so it's just easy.
Perfect. So everybody will, with all of these notes, Tracy will post it in the member portal, and then we'll put a unique link there as well to just to make it really easy. And then we like to be able to follow up too to make sure there are, there's American Heritage can't share with us any details of your loans or anything about, that kind of stuff, but we just like to follow up to make sure we're good stewards of the benefits that we have and that everybody's being serviced well. Okay, is it question Q&A? More Q&A?
Yeah, if
Just
anyone has questions, I'm happy to answer them.
okay, let's do it. What else did we hit? All of Adam's difficult questions?
How do I, what is the minimum amount of loan amount?
Sorry, what was that?
What is the minimum amount of loan I can raise?
Minimum loan amount is 75,000.
Okay.
I'm putting my email in the thread.
Okay, you'll just drop it in there.
Yeah.
So Jessica, I had a question.
Yeah.
So the reason why I'm asking all these things because I just moved from Boston to Pennsylvania, right? And like I was doing high volume in Boston, and but like I know areas, like good suburban areas, and around the Philadelphia area. And I would see deals come out. Like there was two that came out. One came out at 210,000. And I was researching and asking the realtor for comps,
Mhm.
and she came in at like 550, 600. So for me, I'm like, like, but at the same time, I don't know if you use a different system for comps, that's why like I really want to like gear up because I see a lot of deals popping up,
Mhm.
with huge like equity. Like there's one down the street where I'm moving to now. They listed the house for 320 and the ARV came in at $859,000. So I'm sitting here like, okay, this must be a slam dunk deal. So,
Mhm.
but in order to, since, I'm going to American Heritage for the loan, you know, anyone can tell me it's worth 850. But if American Heritage says nope, it's only 450, you know what I'm saying? That makes
Yeah.
all the difference in the world, right? So
Mhm.
that's why like before I put any offers in or even attempt to say anything, I need to know what is my lender going to um, give me as far as a ARV, right?
Mhm.
Because it doesn't matter what the realtor says, it doesn't matter what realtor.com says, it matter what you say it is, right?
Correct. Mhm.
Yeah. So yeah. So if I can, call you, because I'm actively looking, for a few
Mhm.
deals right now. So even if I can call you and just ask you, like give you an address, right? That's all I
Yeah.
do. Yeah,
Mhm.
that'd be great because then that will
Mhm.
help me also determine the like how much money I should I put, a $500 vanity or should I put $100 vanity? You know what I mean?
Yeah.
So it all for me, just by that question alone, by calling you and asking you that, it helps me determine the rest of the deal.
Yeah, for sure.
Yeah, that's all. Yeah,
Yeah, and honestly, just like how you were saying though, like when I said earlier, like the more information, the better.
yeah.
If you want to provide, the comps that you feel,
Mm-hmm.
you can always, and I can give those to my appraisal desk.
Mm-hmm.
I mean,
Mm-hmm.
you're always welcome to give us as much information as, you want to,
Mm-hmm.
build your case and,
Build your case. Okay. All right.
Mhm.
Yeah, that's great.
It's buying season. Jimmy's about to crush a new market. He's like, I just got to do this smart.
Yeah.
Make
All right. Thank you, Jess. Yeah.
You're welcome.
Okay, and then this is from Jeff. He said he was asking going back to the new
Uh-huh.
construction specifics such as LTV and rate. You kind of mentioned them real quick at the beginning, but if you could just circle
Yeah,
back.
the ground up is really similar. Sorry, I'm going to pull up. It's really similar to, all right, so ground up. So that being said, I think this is adjusting, like I said, for the people that have no experience. We're going to start working with them, but there's all different metrics. So like 6 to 9 projects will cover 90% of your full project.
Hmm.
But the loan can't exceed 70%. We don't do the 100% loan to cost on ground up. So the 100% loan to cost is just for the rehab loans. We don't give anyone 100% for the ground up as of right now.
I don't think, Jessica, I don't think we've shared even the 90% yet with our altitude for the new construction. So let's do that and
Yeah,
let's get the word out at that next event.
totally. Yeah, for sure.
Great. So, and Tracy just put in the chat too. We don't have a unique link yet for 7FF. Just contact Jessica, let her know we're with part of the 7FF family. We're members, and and then what happens is as requests come through, American Heritage shoots that over to our team to verify that you're a member of the
Yes,
seven community, and then we verify it, and then it goes through. Okay, let's see. From Sheldon, you mentioned that
love that.
just jump. You don't lend in the five boroughs of New York. Do you lend in Westchester County?
As long as it's not in the bureaus, I don't know where Westchester County is, right? But as long as it's not in those five bureaus in New York, we can lend in it.
Okay, cool. All right, from Brian. Byron. In email, you said you need builder's risk policy quote, but my agent who insures all my flips says that is too robust and doesn't offer replacement cost coverage. She says a vacant renovation policy is much better and offers replacement costs for both the existing structure and new components.
So that is something that we require, or another thing, we do need builder's risk insurance. So I don't think that I could change that. I can ask about what you're asking, but we've always, since I've been here, required that builder's risk insurance for our rehabs.
Cool. All right, so yeah, Byron, send the question, and then maybe there's some other information too of why they require.
Yeah,
And it could
yeah.
just be an investor requirement. I mean, sometimes it is just that way.
But I will definitely look into that and I'll get back to you because I have your contact already as well.
All right. Was this helpful, you guys? Was the okay? I see some heads nodding.
Good. I hope so. And if you guys have any other questions, please call me because I'd rather everyone just, have all the information. It makes everyone's life easier for sure.
Relationships are so important. That's where we really feel like there's some massive lenders out there, and then
Hmm.
there's great volume. You guys are doing a lot, and you're certainly growing, but it also feels very personal.
Yeah.
Jessica, just getting to know you, your business, the market area that you're in. We just feel that that is just so incredibly valuable. And for newer investors that are really just starting to scale, to have somebody in your corner that doesn't want to do a bad deal either and
Hmm.
explain to you why they're not comfortable with that risk is also very helpful.
Yeah, for sure.
Cool. All right, great. Yeah, we're just getting.
Awesome.
We didn't
Oh,
credit
thank you,
score.
John.
Yes. Thank you. Let's hit that really quick. Let me see if there's anything else. Minimum credit, and then just give us kind of the range.
Oh, so the minimum credit score is 660. And then here, let me go back to, I have it on my screen. So
And
let me
maybe
look
just
at
verify that this is correct. What I know is if no projects under your
that.
belt, 660 to 699,
Hmm.
and 60% max ARV because it's
65. Yeah, so that drops you down to that 65. So yeah, so there's different, if you guys looked, I mean, maybe we can go back to that screen really quick if you want, but there's it's like the 660 to 699 range and then also the 700 plus.
yeah,
So we'll obviously on that link that we're talking about, Dave, we should add this on there as well. So it
we
can just
will.
be a quick, so they can just go to that really quick and see
Yeah.
it.
And then if you're up at that higher experience level, then what is the credit score?
So even that one, we have the range. So like 660 to 699. Honestly, the metrics are actually pretty much the same for that.
Yeah,
You
it's your
get-
ARV, right? Is
yeah. It's,
the mountains
well,
going
even
up.
that though, they're pretty generous on that with this too. Yeah, there's not much of a difference with credit. And also, if your score is less than 660, don't just not call. Because I mean, if it's like a six, I'm not telling everyone, just, we'll make it. But I mean, I have, if it's like 650, it's just utilization on your credit. You have experience, you have reserves, you have tons of investment properties. Obviously, like when I put an exception together and have compensating factors, they will take that into account.
Got it. Okay, cool. Oh my gosh, Luke, I didn't even know you were under contract, that one that you just talked about. Let's go. Let's make some money. Okay. All right, good. Yeah, we'll include this too.
Yeah.
Jessica, thank you so much.
Yeah,
Like you're already connected with a number of people on the call,
I
which is
am.
phenomenal.
Yeah.
And you can handle more. I'm so glad you have an assistant, which is
Yes,
too.
I love it.
Yeah, you guys growing. We're going to. So we'll see you in Tampa,
Yeah,
right?
I'll be there.
Okay.
I'm
Very cool.
excited.
All right. I hope you enjoyed that conversation with Jessica. Between this call and the one we shared earlier with Conventus, you should be starting to see the patterns. Different lenders have their own rules and requirements, but the big takeaway is how important it is to understand their process and to actually build a relationship with the lenders. American Heritage Lending provides these incredible terms exclusively to the seven-figure flipping members. And if you want more info on how you can take advantage of the opportunities like this, check out the link in the show notes and learn how you can jump into our community. Thanks for tuning in today. Go back and listen to the Conventus episode if you haven't yet, and I'll see you on the next one.